We're seeing some landmark merger activity from Capital One acquiring Discover Financial for $35 billion to Walmart purchasing Vizio in a play to bolster its consumer ecosystem. Data from Dealogic says M&A volume is up 130% year over year so far this quarter. And we're only halfway through the first quarter, basically. So what's the outlook for the deal-making environment? Let's bring in Suzanne Kumar, who is the Bain Company Global M&A Practice Vice President, to discuss more. Thanks so much for joining us here on set.
Thanks for having me.
Absolutely. So let's dive right in here. The outlook for 2024, now that we've got some landmark deals that have already come forward this early in the year, what's the setup?
I think it's really promising. So as the Dealogic data said, M&A activity is up January and February. And there's two places where that's probably a continuation of what we saw last quarter in 2023, and a few places that's some new energy. So tech is new. Seeing some big tech deals is really encouraging. That's a place that has been down dramatically for the past couple of years. The other place that is encouraging is seeing a little bit more financial sponsor activity, so private equity investments, which has had been taking a hit over the past year as well.
Suzanne, what are you seeing just in terms of valuation? Because we were talking about the fact earlier this week, obviously, with Capital One Discover really leveling up the valuation playing field that we have seen when you compare it to some of the deals last year. What does that tell us just in terms of where we are in that cycle and some of the recovery maybe that we could expect?
It is hopeful. I mean, the story of last year was that disconnect on buyer-seller valuation gap. As interest rates rose, there was some kind of confusion and resetting of what is the right price expectation. And so we've been waiting to see how that logjam, how that backlog will start to get unlocked. And when we start to see deals like this come to the market, now there's a new mark, and we can buyers and sellers can kind of get to a closer place.
What is the hottest sector that investors should be watching for deal-making activity this year, too?
Again, I think the places we've seen deal activity, including energy, a lot of oil and gas, consolidation still to come. Healthcare will continue to be an important part of the M&A market. And then those would be the two places where we've seen a lot of M&A activity, and we should continue to, given the underlying industry dynamics and the need for growth in those places.
How much is riding on the Fed's ability and really the fact that they are going to follow through with rate cuts? And we talk about, there's so much focus on that timing of the first rate cut, but when we talk about the impact that is ultimately going to have on deal flow, how much of that really revolves, obviously, around the pace of those future cuts?
Sure. For strategic deal making led by corporates, I think the current interest rate environment is largely baked in. Mm-hmm. So higher for longer is a comfortable place, at least it's an understood place. Mm-hmm. For leverage deal making, so on the private equity side, venture capital, they're going to be more sensitive to seeing the specific timing and size of those rate cuts. So for the strategic M&A market, I think that's why we are starting to see pickup in deal activity as executives get comfortable with the cost of capital today.
How much will investors, do you believe, scrutinize the deal making that does come forward here? I mean, we think even in some of the deals that got announced last year that investors were really kind of sensitive to where companies were putting that capital to work and the companies that they were going after and acquiring as well.
There's quite a difference between what happens at deal announcement and then when we do studies of value creation over time related to M&A activity. I would encourage investors to be looking at the longer term perspective. So if you take a 10-year perspective and you look at, is a company doing at least a deal a year? So that puts that in what we call a frequent acquirer category. They're going to outperform in the long run. And so looking beyond the specific large deal announcement and the overall M&A activity would be key.
The regulation aspect.
Yes.
We haven't brought that up yet. When it comes to the action that we've seen from the FTC, when it comes to the scrutiny that we've seen from the Biden administration, how do you see that, or within your conversations, to the extent that you can share, how are companies, how are potential deal makers thinking about that, and how do you think that is ultimately helping to guide some of those decisions when it comes to acquisitions?
I mean, this has been building for years, and I would say even versus this time last year, we've moved more into a situation of kind of the known unknown. Mm-hmm. So the landscape is a bit clearer in terms of what kind of actions the FTC or the DOJ may be taking, and that allows executives to look at their M&A roadmap and really consider might we see regulatory scrutiny? Add that lens to their potential deal pipeline. And if there is the conviction and the strategic need to pursue a deal, you can start to take that into consideration. So it's stymieing deal making on some levels. There's going to be certain deals you just don't consider. And then for the small number of deals that get regulatory scrutiny, you need to factor that in.
All right, Suzanne, Kumar, great to have you here in studio with us. Bain Company's Global M&A Practice Vice President. Thanks so much.
Thank you.